Short sell restriction, or SSR, is a term that is not normally known by a lot of new traders. In fact, even a lot of the advanced traders probably don't know exactly what SSR is and exactly what it means when that is in place. In today's video in Young Money Investments, we are going to be talking about what SSR is. And this is a video that really, you can't find many of these on YouTube. So I hope you enjoy. Alright guys, so like I was saying in the intro, SSR, short sell restriction, is something that is a little bit interesting. It pertains to short selling. So short sell restriction is pretty much as the name implies. Short sellers, or people that are trying to short a stock, are restricted in actually shorting a stock. And this was a rule that was put in place by the SEC, which is obviously a regulatory committee here in the United States, to prevent selling pressure and companies or retail investors to actually drive prices down and manipulate a stock. This came into play roughly right around the financial crisis, 2008, 2010. I think it came into place 2010, 2011, if I remember. But it really became actually a rule that was put in place again because of the financial crisis. And so this is a rule that kind of was put in place to prevent market manipulation, although I feel like it kind of manipulates the markets still, because the fact that SSR is there. It doesn't allow the markets to react freely. It basically makes it so if a company moves down 10% or more, it makes it very difficult to short a stock. So if you have SSR on, it means that if SSR gets triggered in a day, the rest of that day plus the following day, that company is going to be very difficult to short, and I'm going to show you how that is. If we take a look here at BPTH, it's a company that ran up almost 200, it says today it ran up 223%. At its highs, it ran up well over that, over 350% plus, just intraday. Now, as you can see, one of the things obviously is that once it hit its highs, it came crashing down, almost 55%. One of the other things that you will also notice with this is on that red candle down, one of the things you cannot do with SSR being on, and I would assume, and don't know for sure in this particular example, is that SSR would most likely have been triggered right in this range. Now, what SSR means is obviously you need to understand level 2. You need to understand what the bid is and what the ask is on a stock. The bid is the price that buyers are willing to pay. The ask is what sellers are willing to sell. Obviously, sellers want to sell their stock for more money. Buyers want to buy it for a cheaper price. And once those two numbers meet in the middle, that is when a order actually gets executed. So you'll get a wall of buyers that will build up. And then once they finally are like, okay, we're willing to pay what people are asking, or people that are asking or wanting to sell their shares, they decide to come down a little bit, they meet in the middle, and that is when the magic happens. So that is basically a brief summary of what level 2 is. Now, what happens is with SSR on is you will still sell your shares at whatever the current ask price is. So the catch with that, though, is you are not able to sell into a down red candle. You have to sell on the uptick. Now, what happens when you are selling your shares on an uptick? It is still going to drive the price up more. Anytime you're selling your shares at this price, you're selling into the positive, into the green. If you're selling on the bid, this is going to drive the price down further because people are going to want them for a cheaper price. And so when you actually sell them up here, it's going to be making people have to continue to pay more for it. So that is going to be the first part of your SSR restriction, is it's going to force it where you have to buy into a green candle, into an uptick. Now, the second part, and why this makes it difficult to short sell a company during SSR, is because when you actually want to buy your shares back or cover, what happens is when you go to cover, you have to cover on the ask again. So you don't actually get to do it here on the bid. So this is why it causes a lot of difficulties. And I think I just want to do like a quick little recap. I kind of wrote some stuff down here. Basically, it needs to be understood that by buying at the ask, it moves the price up, and buying at the bid drives the price down. When SSR is enabled, you cannot short the bid, you can only short at the ask, and that is what drives the price up. This also means that when a short covers, he covers at the ask price, and that is going to drive the price up. So that is why, like I said, short selling on SSR often will cause what is called a short squeeze. It'll make it where the price will start to be driven up more and more. And that's exactly what you can see right here. It sold off. You saw this happen. It was on SSR, and so it makes it very difficult. So when you go to cover your short position, you're covering your position into the uptick, as opposed to being able to just sell and whack it right there on the bid. It's just not possible. So that is a brief explanation of what SSR is, and it's something you need to pay attention to. You can see if a stock is on SSR. It's good for short sellers to know if a company is on SSR, but it's also a great opportunity for long and for buyers and people that are going long in a particular stock to know, hey, this company is on SSR. We might have a chance for a potential short squeeze, and that will actually help it out quite a bit. So hopefully this video was informational. Hopefully it was helpful. I hope that it was good information. I know it's not out there really readily available on YouTube. So if you found this video helpful and insightful, please hit that like button. If you haven't hit the subscribe button already, please join us here in Young Money Investments. We'd love to have you being here a part of the community. Also check out We Trade HQ. There's a free trade tracker on there. Feel free to track all your trades. You can compare it with other members in the group. It is really a great spot to be a part of. And there's also great mentors and teachers, including myself, that would love to help you out in your trading journey. So check all that stuff out, and I will talk to you guys later. Thanks so much for tuning in to Young Money Investments. Bye.